Hello. So yeah, this is the first dev meet of 2022. And unfortunately, or fortunately, there won't be, I think there won't be as much to talk about, just a few topics here. The last couple of weeks, I think a lot of people have been out. A lot of the topics that we started or that we talked about 2 weeks ago are still in progress. Like, for example, Neodyme didn't want to start on MNGO integration or MNGO security audit until after New Year's because, holidays, they didn't want to do something halfway. So that's kind of the story for a lot of these things, including account equity, which is Clark Kenny built it. There's a couple more bugs to work through, but everyone's been on like 50% on over the holidays. Regardless, we did do this thing. Henry proposed burning 5 billion mangoes, or 1 billion and then 4 billion. We burnt those 5 billion mangoes from the Dow Treasury because FDV is fake news. And there was a price pump, and I think the basic prediction from a lot of people was there might be something temporary, but it's not going to matter until like FTV numbers are updated everywhere, like CoinGecko and CoinMarketCap. And better yet, if we could just remove the FTV numbers. And again, I think that's important because the tokenomics, although it looks, I think there's like this PR hit of people saying, oh, you guys are trying to pump your MNGO tokens and all this stuff. Well, the appropriate way to characterize it, or the way I would characterize it, is making the MNGO priced appropriately, or have the information out there that's appropriate, which would be the FTV number not being totally accurate. So maybe call it correcting disinformation or something. And that's important for the health of the platform because, and we'll talk about the liquidity goals, but anything that the MNGO DAO wants to do will probably require MNGO, and then you'll have this runaway effect. Oh, interesting. Apparently, CoinGecko said as long as there's a max supply, they have to show FTV. Interesting. Anyway, we'll see if we can talk to them. But yeah, anything we do, we will have this issue of releasing a lot of MNGO, and then that could tank the price, and then you have to release even more MNGO. There's runaway effect, and so it's not good. So that's just to kind of defend against the charges that it's just like short-term pumping tokens or whatever. Okay, so that happened over the last couple of weeks. The other thing was we've been trying to talk to sort of BD people, or people who know a lot of market makers, who have onboarded market makers in some centralized exchanges, and try to get them on board working for the MNGO DAO and set liquidity targets. This is just like some numbers that I came up with looking at other exchanges. Actually, it would be kind of cool to see as a reference point what FTX looks like. So let me copy paste that over. But yeah, if you're looking, you should be looking at the DevMeet agenda. I'll copy. This is like for reference what FTX looks like. So yeah, and this is just to briefly explain the numbers. It's like, what's the slippage, one-sided? What's the one-sided slippage for 100K, 100K order, calculating from midpoint? So mid of the order book. So, you know, on FTX, it's 1.2 bips spread for 100K. And for 1 million, it's 3 bips. For $10 million trades, 21 bips. And of course, it's going to be different on the upside, on the buy side and the sell side, but this is taking the average of those. You know, FTX is like the second most liquid exchange for derivatives. So I think going to FTX level is maybe not a good target for us. However, we are probably competitive with or better than FTX given our lower fees. So if we could get to this level, if we could get to say 5 bips for a 100K trade and 10 bips for a $1 million trade, and the FTX fees, which I don't know off the top of my head, but maybe like the median, you know, comparing the median person, maybe, I don't know what they pay, maybe it's like 10 bips. On DYDX, it's 10 bips. So we would be better if you consider the fees into it. So, and I think that's a really good spot to be in, and it's like worth paying for and kind of going all the way to see where Mango markets can go. I'm sure we'll encounter a bunch of issues getting there. We'll have to see that, we'll solve them. So yeah, and I think we could, if Max is ready to take over and start talking about TradingView, we could talk about that. Otherwise, we could continue this and talk about like open mic, ask what amounts is okay to if these liquidity targets look okay, what amount we should use to incentivize it.
You want to change, is the maker rebate going to change at all so that that Mango collects more fees?
Yeah, I think.
How does that factor in?
Yeah, I think one of the two should be reduced, either the liquidity mining or the maker fees. Because, and honestly, we have the liquidity mining, it hasn't been working out as well as I thought it would. Probably a big part of it is you just need to go physically talk to market makers, get them on board. So there's that. The maker fees, it makes sense to reduce it. Maybe, sorry, not reduce the rebate. So instead of 4 bips rebate, maybe reduce that a little bit. I'm not sure we need to do that right now, because I don't think it'll make that much of a difference. You know, there's a bunch of USD in the treasury. Getting a bunch of people, getting market makers in seems to be like a bigger priority than changing the fees. But maybe long term, I don't know. Maybe 3 bips net is cool, is good. Maybe like 3 bips taker, 0 maker. But I don't know. I haven't given that as much thought in the short term.
I think that the liquidity targets as a whole are good. I think it's important to realize that I wouldn't expect one market maker to make those liquidity targets. But if you can get 3 or 4 market makers, each one's going to have a different view of the market, a different fair value, different spread they're going to quote, different position that they're going to shade their quotes. And I think that's how you achieve a really tight market and achieve those liquidity goals.
Yeah, you're right, and that's why we've been talking to people who can bring in the market makers. So yeah, like a DMM program a DMM program would include monitoring our liquidity, monitoring who is providing what liquidity, and then and of course, it should be open and competitive so that everyone can access it. And giving those people some kind of incentive or reward for getting that. And then, and yeah, like this is not realistic for one market maker. But yeah, like you said, just overlaying 4 or 5 different market makers on top, and they're all slightly different, you know, might get us to this level of liquidity. Agreed.
So is it onboarding? Is it the difficulty of being a market maker and getting set up as a market maker on Solana, which is something they might never done before, is the problem? Or is it the problem that they're just not being offered enough money or Mango?
I think it's the first one is the larger issue, but then the second one might be in a way in that maybe our liquidity incentives are not like correctly tailored. They don't understand it. There's stuff like that. I'm not sure about it's the MNGO amount, not enough, but say even, we're not even targeting the top 1 million, right? So if you're quoting at 1 million, you're not getting any MNGO at all. So things like that, that could be tweaked.
Yeah, I think like the current dissatisfaction with the liquidity usually is expressed in like people who put on maybe a stop loss or something like that is a bit too big for current liquidity. So I think we had someone last week pay I think $70 for FTT instead of $40 where his stop loss was triggered. But mostly about the part of his order that was bigger than I think $130,000 or something like that. Like it was really like, basically we stop after like I think $100,000 in size. We stop being like competitive at all, to the point where it's like people think we steal from them, right? I would say that's the natural reaction of people. They're like, what the fuck, I traded in your exchange and now I lost a whole bunch of money because the order was too big. So I think this, yeah, the incentive right now doesn't really reward anyone fixing this part, right? And so from that example, we see how this topic is like we need to have coverage on a lot of spots that we right now are ignoring with our current program. And then there was a question why people are so slow to integrate. So I think everyone who's like trading like centralized exchanges, for them it's like a technical hurdle to come to Mango to some extent. And there's basically the question if they want to trade on DYDX next or on Mango next. And I think in general, people have a good understanding of that it's lucrative to trade on DYDX. There seems to be like a general consensus online that their rewards program is very effective. And so people usually prioritize it before Mango, also because there's just in general more volume. So if you would end up in a very big position, right, like through market making, you'll be able to get out of it. While with Mango, it's not really clear who's the counterparty and how you can get out of your position ever again if you happen to have like 80% of the open interest on your account. I think that's kind of like the concerns we hear. So something to like chew through and yeah, work with a lot of talking and convincing is might be needed.
Yeah.
I mean, we've talked before a bit about like how DYDX has like their API is much more like a traditional, you know, centralized exchange. That was one kind of important thing.
Yes, we talked about that. We do have so Mango Bowl is now getting there. and I'm gonna try to push people to, before we hand out the grant, like get it to the state where the API is as close to centralized exchange as possible. It's, of course, like we don't. I've never actually used UIDX API, but you know, there's this added thing that we don't custody your private key, and so there is that. It is going to be a slightly different. Like you have to maybe put together a transaction and then you have to sign it. There's going to be a few things that are different, but yeah, that is still ongoing. There was some progress made on that, and I've been using actually. So TARDIS. So this guy Thaddeus is building Mango Bowl. He's also built TARDIS, which is like a kind of historical data and real-time data connector to all the crypto exchanges. It gives you normalized data. That's really cool, and I think Mango will then be integrated into that, or maybe it already is. But yeah, we need that like coherent product.
So I think the Mango Bowl is kind of working already, and I think it's mostly feature complete. So like 90% or so, I would say.
Yeah. I think the final piece though is less the features, because we have all the features actually. We've always had all the features. It's just that it was hard for a total noob, you know, who's only built on centralized exchanges to get up and running very quickly. And yeah, it's a more of like a social, you know, empathetic exercise than just having the features. So far, we, you know, I think we've not done a great job on it, actually.
I think that part of the problem there with order placement is that overlaying any sort of API on it is probably, you know, that's going to add some latency and maybe need to go through your own stuff. It might not be what a professional market maker wants to do. They probably want to get in and, you know, send orders directly to validators. But that's a complex, you know, uptake. That's not just, hey, let's plug it into our existing stuff. So I think everyone looks at this and says, do we want to spend a month, you know, figuring out all the details? No, let's just go jump on DYDX. We can do that in 24 hours.
Yeah.
So I'm not sure what the solution to that is, but I do think that's part of the
Sorry,
problem.
what was the problem exactly?
I just think the problem is that it's, you know, trading on Solana and sending orders is way different than centralized exchanges. And even if you try to wrap an API on top of it, I don't think that you can encompass, you know, what a professional market maker would want to do with just some wrapped API on top of it.
Yeah, that's fair. Yeah, when I think about it, like, for example, we were talking to one market maker who, I guess, you know, one of their devs was tasked with integrating into Mango, and for a long time, I guess he was just struggling at it by himself, and he was wondering how he can do atomic cancel replace. He just thought that's not a feature, and that's, I guess, those kinds of things we can answer very quickly. We can create docs on it. But yeah, atomic cancel replace is that's maybe even an advantage of Solana architecture. You just put a cancel and a replace into the same transaction. But yeah, it's not the same as doing it through a centralized exchange where they have one API endpoint that's called cancel replace.
Yeah, and likewise, when you send a transaction, you probably want to batch all your orders together, cancels together. I mean,
yeah,
that it's hard to kind of wrap that into a traditional trading API where, it doesn't matter. There's no cost for orders. You send them all down the line as fast as you can.
Yeah.
Here you have to kind of do it in a slightly different way. And it's something to think about.
Yeah. I was thinking, hopefully, there's a part when I've integrated with exchanges before, there's the first like 30 minutes matters a lot, where I'll see if I can get something up and running in 30 minutes. And that level, even if it's bad, like, of course, ultimately I'll optimize it a lot. It'll look way different. But that first 30 minutes, if it's like really bad, I think the probability of ultimate integration is gone, or very low. So yeah, one target is getting an easy, I don't know, you integrated, like how easy was it for you? Like the first 30 minutes might still have been very confusing.
Yeah, I mean, I think it was very complex. But I think that having someone on the team, I mean, certainly Geoff's code helped a lot with that. I think having someone on the team, handhold a new market maker and manage that relationship and say, look, this is how you should do it, will go a long way.
Yeah. Yeah, so do you want to move on to the next topic here?
Yeah.
What's next? Yeah.
So TradingView contacted us that we were missing some attribution links on our trading form integration. I think that's started a whole conversation that we need to add some logos here, there, or change some things in our display of how we display the charts. And then I had another call with the sales guy, because that's how TradingView works, and then we talk a bit. And so basically they, because we're anyways revisiting it, they want to make us start paying for the integration anyways. There's still some like free ways how we can continue, but they require us to change.
It's really high.
Huh? Please mute yourself. So yeah, they require us to change some things in the integration. I just wanted to have like everyone look at it and let me know if they think it's like interesting or not for us to upgrade the level of integration we have, because now is a good moment to like figure out which features we really want.
Pasos muy complejos, que son muy complejos. Ahora entra a la computadora, viste que en Google podés ver la lista de contraseñas.
So the other thing I noticed is that TradingView shows the trading data for all Uniswap, SushiSwap markets already. And there seems to be some way to get your data in there. So I also asked for a quote for that. And I think like the charts and everything cost like, I don't know, $10,000 to $20,000 a year. But then this data integration, that got very expensive quickly. That was like, I think, yeah, they wanted something like $100,000 listing fee and a whole bunch of stuff. Maybe I'll share a photo of why I think that is important. But basically, if you go on TradingView and look for SushiSwap or Uniswap, you'll see that most of the markets are exposed. And I know that a bunch of traders are using TradingView to track the difference between different exchanges. So the spread between the quotes, I don't know, on Binance and MNGO, for instance, would be interesting for people to monitor. And the only way to get there is basically integrate with them. Yeah, I was curious if anyone agrees that we should have this, or yeah, what everyone's take on that is. I think the offer I got wasn't very faithful. $100,000 listing fee sounds very expensive for something where we do the bulk of the work, formatting the data in a way that they can read it.
Is there is there a way we could continue just using it for free?
Yeah, the current way we're using it, we can probably continue using it for free. We need to write a blog post and do some co-marketing and a bunch of shit for them. And
is this
I
like
think
forced labor where is it like indentured servitude? Or like if you're in a restaurant and you don't pay the bill, they make you clean the dishes. Is that it?
Yeah, it's a bit like that. Yeah. I think, yeah, we need to yeah, we would need to link to another exchange. There would be a link on the TradingView that takes you to that takes you away from MNGO to TradingView's page. If you use the free version. And then also we need to write like a blog post or media post with attribution, and we don't get support. Most of the offers they send me include some form of support, but I don't think their support is really good. So
I get the idea of paying them for the use of their product, but paying them so that we can supply our data to them doesn't sound right. I can see how it works well from their point of view, but they're data providers, and paying them just to accept our data, even if it wasn't 100,000, it's still I'm still not sure of the benefits of that for us. What are the benefits of that for us?
I think some of the benefits are that you can basically see the markets next to markets from other exchanges, right? And if you've used TradingView before, they have a lot of features like you can do 1 divided by some ticker or 1 multiplied by some ticker and mix and match a lot of tickers across various exchanges. And I think, yeah, so this is one of the feature I know I use. And I think this could be useful. And people also like to have different tickers from different exchanges on the various lists they manage. And yeah, so they are providing the opportunity for you to put your ticker or from your market over there.
Okay. Do you think it's worth doing, worth pursuing?
I think the price is a bit steep. If it was cheaper, then I think, yeah, definitely it would have been useful. So for example, people prefer TradingView as their only platform where they watch all the charts. And of course, it makes sense that if they trade on MNGO, that they would also stick it over there.
How big is that section of the population, or how big is that market? Do we know?
Very hard to tell. But I think, yeah, quite some people use it. I think a lot of traders use TradingView. Yeah.
Okay, thank you very much.
yeah, I think I'll have a follow-up call. This kind of mirrors my feeling, like I also don't want to pay for it. It seems like maybe we're in the wrong program, or maybe the path forward is that we figure out who supplies data to them and integrate with them directly. I'm sure they don't do the work themselves of like figuring out all the trades on sushi and stuff like that. I think they're using a third party. And probably if we convince that team to include MNGO, it might be way cheaper and just involve like, I don't know, talking at a conference. I don't even think we need to bribe them. We just need to excite them about the project and get them to be part of this. So I think it's more like, yeah, might be easier to go that route, and then it's very easy for TradingView to add our data. But I need to figure out who that data provider is. But I'm pretty sure they use someone. They don't do it themselves. and they're just trying to charge a fat fee on the introduction. And then I think the last part, third-party integrations. Okay, so there have been like a bunch of teams who started integrating with MNGO v3. And it's starting to, like, usually what happens is they basically they contact us during the development, and we give them support and chat, and then maybe 1 or 2 months in, things look kind of like finished on their code base. They maybe have an anchor project that has, I don't know, 10 instructions, and each of them is like 100 lines, and they start writing a lot of like off-chain stuff, and then figuring out how to do the accounting correctly, and maybe funding rates is a problem or things like that. So I hear there's like, they slowly go into this like deep dive into MNGO, and I think the furthest along is actually Investin. They have a working integration on mainnet, and they figured most of the stuff out by themselves. I think they asked us very little questions and sent us some pull requests at some point. But they also asked us to do at some point they were finished, or at least wanted to release to mainnet, and then they asked us to do a security review of their stuff. And I think, Daffy, correct me if I'm wrong, but no one ever did that, actually. No one looked into it. Partially because the project is very complicated.
No, I just haven't had time, but
Yeah.
also the code was closed source for a long time. I only got access a couple weeks or 3 weeks ago, I think, and I shared access to Microwave Cola. But I'll talk it with him if he wants to do a review of it. But yeah.
Yeah. So there's the review for Investin. I did a UXD like a few weeks ago, and I think they're ironing out the last bits. They're mainly waiting for audit right now, and I think all the audits will finish end of January. Then there's Soul Street. I think is very similar product to Investin. Well, one of the developers from the team is also running a market making bot on MNGO. I think he has something like a fox or something as an icon. He definitely has Soul Street in his name, 0xAB. Yeah. So they're also quite far ahead, and they want us to probably have a look once they finish it, end of January. And then there is Juiced, which is, I think they're doing like a basis trading, kind of like yield farming thing, and they're still early out. They didn't share code with us yet. And there is actually another team which kept changing the name, so I don't know what the name right now is. That's doing just lending protocol aggregation. So, and I wanted to bring this up because I think there's like, we kind of need to decide how we want to organize all these reviews, because it's starting to get a lot of work, and probably it's best if one person is per project assigned. So I think we should do it. I think we should look at things and like figure out if they're safe or not. Probably the question is if we want to do it for free, or we want to set up a way to make sure there's like a reasonable price, because I think it's also a bit like people like to use it as a marketing. They like to say, or like marketing things. So they like to say, hey, someone on the MNGO team reviewed this. And they like to use that as a way to attract confidence in their product. Which I think it's fine to like ask us to review it, and we can do it secretly and look at things. But if they want to advertise with it, there should probably be a cost to it, or some form of commitment. I know that we always paid very generously for our reviews to different people that were at that time available, and who were also working full-time on different pieces of Solana or the Solana ecosystem. But yeah, I think not everyone has this like high esteem, and I feel we leave a lot of time and like work on the table without really thinking how we can structure the deal in a way that it's like more beneficial to Mango. At the same time, I struggle with the idea of like getting paid, because it feels like adding a bad incentive for the individual contributor if they're paid by the outside.
I think there's some upside to us to do the review. The upside for us is, because I was considering using Investin, but I wanted to first know that like my funds are safe before I use it or recommend it to anyone else. And then if we can verify that it's, at least in our review, we're not going to get it 100% correct. We're not even like security auditors. But if it looks good for us, then that, and that product gets more usage, that also leads to Mango getting more usage. So it's like an extension on top of Mango. So I think there is upside there. And so we should just prioritize the ones that we think are it's going to be most upside. Like UXT is going to be probably the most upside of these here. And I think you already have done a review of them.
You looked.
Juiced and Investin are also, and like Soul Street, I have not heard much about. So, yeah.
Yeah. So, Anas here. You can hear me?
Yeah.
Yeah. So, as I said, like if we can get a good review, if you guys are able to find anything that is vulnerable enough, then we can work on having some kind of bonus to it if the Mango devs are able to find some kind of vulnerability. Otherwise, it could be just a goodwill thing that both the protocols are doing here. So yeah, and on the market making funds that we had built around like 3 months ago, I just wanted to know, like if we work on it, probably we can launch it in a week from here. So like, do you guys have anyone who would be interested to run these funds, or like have shown particular interest in running these kinds of funds or not? Because it takes significant dev resources on the UI side to deploy it. So just wanted to ask on that as well.
The market making funds. So yeah, I had a couple of, well, I would have to read the code first.
Yeah. So yeah, that's the reason.
But there's just a few things like, it does seem ultimately that you need a little bit of trust in the system, or trust in the manager, because the manager can always like clear out the book and start trading against his other account. I take a bunch of investor money, and then I start trading against another account that I own, and I just say buy Bitcoin at 10% above the current price using the managed account, and I sell from my other account, and that's a way to just kind of drain the funds.
Yeah, that's a possibility.
Yeah, so I think, yeah, and then there's also other legal issues and things. So I will ask around, but I think, yeah, we should talk about that later, like about a specific market maker who'd be interested in doing.
Sure. Yeah, and what we do is like we list only the markets that have highest liquidity. We just don't allow all the markets to be traded, right? Even right now, we just allow BTC, Ethereum, Sol, and AVAX to be traded through Invested, because if we have illiquid markets, we cannot withdraw and stuff happens. Yeah.
Mm-hmm.
So yeah, I think microwave cola we added microwave cola like 2 weeks ago, and yeah, I did create a group on Telegram as well. Like if they have any questions, they can just ask us and we'll clear it out for them, because the accounting system, as Max said, it's pretty intense to understand at one go as well. So we are here to help you guys. Like if you are stuck at anywhere, we can just go through that with you, and we'll have some kind of consensus that okay, this code is good, and we can sort of have this, I'd say, approved mark, something like that.
Yeah, I still think like if you guys want to go and say, hey, someone from the MNGO team reviewed this, I think there should be a cost to it. I think like when I say cost, maybe it sounds too much like money. I think, for instance, like open sourcing your code, that would be, I think, like a good cost to pay for like a stamp of approval. Because, right, if we do the review for every project, right, like Soul Street is very similar to Invest in, and we'll need to review it, and it will be again work. So having like, right, like someone have the advantage of running around and convincing people to use their product with like, sentences like, oh yeah, the MNGO team reviewed that, it's safe. Of course, it's only possible to like we need to like figure out whom we give that approval first. And I think we probably want to do that to the party that open sources the code first, because then everyone else can figure out how to integrate themselves. Because it solves for us the issue that we need to give support on closed source projects, which is very not scalable, right? Like it's literally like.
Yeah. So yeah, on the open sourcing part, the only reason we didn't open source till now was being ripped off, because as you know, we haven't raised any money from anyone, and it's all bootstrapped. And the only concern is like we are still very behind on marketing stuff. So that is the only hindrance that we have. And the last time I had the talk with Daffy, he said that just remove all the fees and let the money flow in, and that would just make you it would be pretty hard to compete with a protocol that has no fee. So we just removed the fee right now and aiming to have some kind of good traction with the trading competition that we are trying to host in this month. So most probably once we have like some kind of TVL, like at least 10 million or something, then we will open source our protocol, and we actually don't mind open sourcing our protocol actually. So the only reason we kept it closed was not being cloned and having and people could raise something on that, and that is the reason we didn't open source.
Yeah, we could, I don't know, we could, well, yeah, we could talk about the specific cost. Yeah, I like what Max said, that there should be a cost, not necessarily money, cost like this, like open sourcing. But yeah, now we're getting into the details of like what's the correct strategy for invest in to succeed and all those things. So
no, like I would say that like let the MNGO team review, and if they find any kind of vulnerability that we overlooked, then we can compensate on that. Till then, we can see that. How about that?
Yeah, I think it's not. Yeah, I feel it's more about like the community aspect of it is like, because we'll need to review, like we get a lot of questions from people on the integration side that are basically the same thing. Like everyone asks the same questions, like literally the same. Like they're like, oh, how can I? It starts with like, how can I call this from Anchor? And I'm like, oh, cool. There are like a bunch of projects integrating, but I can't use any of that as example code, although I have access to all the Git repos, right? I could just be like, yeah, this is how UXD does it. I have the Git repo, fine. But I can't because it's closed source. And now I need to do like double work for all of you guys because you guys can't develop your shit in the open, right? Like it's a bit tricky. It creates a lot of double work.
Yeah.
I think it's also really great that you are here and we can discuss these things openly. I think we're not, yeah, you know, like we're all figuring it out. I just had some frustration over the last weeks every time like someone asks this like very basic questions, you know.
Yeah,
maybe
there's a huge, I would agree with Max here, like helping open source projects, it just feels a lot better because it's open record, you know, and even I think it helps, like I can just say, oh, here's invested, here's how they did, you know, here's how they integrated with MNGO. And anytime I help and anytime I point to invest in, it's like there's a record of that too on the internet, and there's a link to invest in. There's a downside risk, right? Like you mentioned, there's a downside risk. Someone can copy paste the code, but I think it's very low risk. It could have been done with MNGO for a very long time, and no one really did it. You know, so it's same with invest in, which is yeah.
True, like let's just we do aim to open source just after the trading competition, and we believe the trading competition that we are trying to do would help us bootstrap the initial thing that we are aiming at to get. So yeah, and aiming to get your all votes on the proposal that hopefully Max is gonna put up for the trading competition. Yeah, thanks for your time, everyone.
Yeah.
Yeah, I'll put it up right after the call.
So yeah, we should then, yeah, maybe we'll delegate on these tasks here, on these projects.
Yeah, maybe we just find a way, like who'd be up for it. The other thing was,
can I review Juiced? That seems easy.
yeah, you can reach out to them. They have a channel, I think, by now.
I think I could look at invest in this week, maybe.
Nice.
Cool. And then I don't know if Max, you've already been looking at UXD, so.
Yeah, I think they're launch ready. It's like,
yeah,
it's pretty much done. And they're also paying some like auditors to have a look after I had a look. It's just like, I feel because our support is for free, we get to do like, because we're like this, like, it's like a slippery slope from like telling them about the API to like reviewing all the code and like helping them with architecture. And then like suddenly you figure out you're like working on this project like 1 day a week.
Yeah, no, I totally understand that. I stopped responding as much. You've been responding to them more, but it's
it's hard, huh? And,
okay, but right now, but we do get a payoff, hopefully, and we'll see.
I think so. I agree.
Yeah.
No, I also see the bigger picture of it, right? Like it's great. It just might feel a bit. Yeah, we kind of need to figure out how we want to do it. That's why I also like I had to think of it when looking at the TradingView like offer where we like need to write a blog post if we want to get it for free, you know, like that kind of like cost can maximize the effect we get from these integrations, right? And maybe they will also create a bit more like respect with our time, because you know the auditor, they need to pay like 300,000 for the audit.
Yeah.
And so they only go to the auditor after they finish getting the free support from us, right? So it's like we're actually doing more work in reviewing the stuff because the auditors are so hard to reach. So something about that effect, like I feel we can still improve. But yeah, for now, my strategy also was like as much support as possible, trying to help people build cool stuff, right? Like it's not like I don't want to like slow anyone down. I just see it as like something if next year gets crazier and we have maybe like 10 integrations in that year or 20, basically like it's like full-time role, right? Like, or at least like maybe even 2 people working on it. So trying to figure out what the best process there is. don't think I have an idea yet.
No.
Yeah, Mango will get liquidity. It's true. The question is always like how much. And I think to some extent we're willing to discount a lot the liquidity we estimate a project will bring versus our personal relationship to the founders. And it's just, there's just no model, right? Like why we spend more time on some projects or not. And maybe we should be like, once volume picks up in projects, we should be more deliberate maybe. And I think, yeah, the open source angle is probably like the holy grail. I think if someone comes around, that would probably mean we focus more attention on it. But that's just the feeling right now. Like, I don't know.
Okay, for starters, what we were just having a chat as well. So what we can do is like the market making funds that we have, we can basically make it live and open source that particular funds in this month by next weekend or so, by launching it as well. So that we can do.
Nice.
Hey, see, we have anything else for this week?
Oh, token locking.
Yeah.
Yeah. Do we have an update on token
locking? Yeah. So token locking, Christian and Nako wrote the code. It's in review with Neodyme. So once the Mango V3 review is finished, they'll review the governance program version 2. Part of this is reviewing our plugin to it. So the I would say the code part is not reviewed yet, but I looked at it a few times. I think it's really, really good. I don't think we're going to change anything there on the smart contract side, but let's hope I don't talk too highly of it. And then the part we're now looking into is designing the UI. So I had a chat with Sam yesterday, and I'll send him some examples of how the data structures work. You wanted to have a shot at it. So UI specifically about viewing how big your grant is, depositing more tokens, locking them voluntarily, all that stuff. And so there are like some parts of the governance UI need to change. And then Adrian hopefully is like next week sometime going to implement that and work on it. There are basically some changes to the governance UI that we need to be able to give these grants. People need to be able to vote with the grant afterwards, etc. So the timeline for it right now is end of January, everything is finished. Given the different moving pieces need to come together from review to figuring out what legal entity gives the grants, etc. But yeah, everything should be done by end of January.
Yeah. You know, just adding one more thing on thing that's been in development here is we have this idea of like portfolio margin. Yeah, changing gears a little bit. Portfolio margin, which I think can be done on Mango V3, or I kind of over the holidays worked out how to do it. It would be kind of like a decent size program upgrade. But I was wondering if that's more important. And there's another thing that's like partially implemented as well, which is margin trading, like arbitrary margin trading across all DEXs. So right now, you know, Mango only supports Serum DEX, and of Serum DEX, it only supports like these 15 tokens. The new feature would allow you to trade against or trade on any DEX with margin on Solana. which is, would require, we have to just make sure the security's good. That's the main issue there. And you have to do a bunch of like UI integrations. So I wonder which is, you think, more important for adoption? Having this margin trade across all DEXs, all tokens, as long as those as long as the start and finish tokens are in the Mango group, or portfolio margin where if you do let's say you long the spot BTC and sell short the perp, the margin requirements will be the larger of the two. So you only have to do the margin requirements for the spot, longing spot. You will not be charged any margin for shorting the perp. So that should make it more efficient, maybe like 30%-ish more efficient for most pairs. So, all right. Yeah, the main downside of this all DEXs thing is that you're still limited to the tokens that are in the Mango group. And another possible upgrade is upgrade to 32 markets, 32 tokens. So then we could have 32 tokens in the Mango group. But yeah, like random shitcoins that pop up on a day-to-day basis will not be, you won't be able to margin trade them.
Couldn't you just like get USDC and then swap it somewhere else within the transactions and then swap it back?
Yeah, the
Means you might hit the transaction limit, of course. But
I guess the thing is, if you wanted to go long Doge or something that's not in Mango, the idea of going 5x long is really you borrow USDC and you buy Doge, and then your Doge is kept as collateral. But we can't do that because the Mango group doesn't support Doge. Okay. Yeah, 32 tokens is like with 32 so I think the main reason we haven't gone forward with more tokens is that we were thinking get the liquidity on first and get a bunch of market makers who can quote the perps, and this is important just for the perps, and then expand to 32 tokens, that's 32 oracles, and you don't have to like bleed so much mangoes to incentivize liquidity on all those pairs. But if we think of 32 tokens as mainly a play for the spot leverage trading, then it doesn't cost us very much and it makes more sense. Assuming, and we won't have like perp markets on those. You guys traded on BitMEX. I'm not sure the point here about BitMEX, but you could add spot. Yeah, you could add spot immediately and bring perps. Yeah.
There's something to be said about like having more, especially like SPL margin trading available. I think people would enjoy that. I also feel that the oracle limit is like one of the most annoying architectural limitations of the product. If we want to look at DYDX, for instance, I think they're, I mean, they only cross margin the perpetual positions with each other, but it does feel a bit more advanced because you have these like, I think 30 markets. But even if we would have 30 markets, then we would still need to make the decision if we want to be basically offering the same trading pairs as DYDX, which is kind of missing the point of being on the L1 and having like a healthy DeFi ecosystem we can integrate with. which is probably another 16 coins, right? Where maybe, right, like people want to borrow radium to take it somewhere else, or people want to you know, technically trade on different spot margin strategies that that only, you know, that also connect us with the rest of the community in some way, right? Like people really want to list on MNGO. It's like one of the most requested things from any other DeFi project on Solana is like, oh, can we list on MNGO? Like people have a white paper and they ask us, can we list? Right? There's like zero barrier to asking, of course. And always we need to give the answer, hey, like we really like you guys. And if you're on mainnet, let's hope we have the architecture issue solved. By now, some of them are in mainnet.
So the issue though, like with, and maybe, okay, so maybe the solution really is go with Mango Slice, which the main technical limitation there being you need a oracle, or you need some kind of mark price that's not easy to manipulate. Yeah, I think honestly, I think that's like the main limitation. But with Mango, the reason why we can't do any new coin that's launched is it risks all the deposits. That's like our major drawback. Everything is risked together. And we could, I wonder, you know, because everyone thinks like increasing to 32 would be great. The main drawbacks are you have to migrate people, or we have to do something really ugly on the program side to try to do this without a migration. So ugly that maybe, you know, I don't know. I'll spend some time thinking about it, but it'll be very ugly, and people integrating will have a hard time in the future. So,
quick question: how long do you think we can go with the weights? Like, could we really set them really low for some of these long tail assets?
Yeah, we could just set low. I mean, for Mango, we have 1.25x leverage. You still have to make sure that like you won't get rugged by the team. If somebody has a very large supply of that token, you know, they could deposit into Mango, withdraw, no matter what it is. So imagine if they have the key, right, the mint authority, right? They could just mint more tokens to then use it to borrow. So we're going to 32. We can't list random new coins, but we could still probably list a lot more coins. Yeah. So you have this forced migration issue, and then you also have the issue of what coins, like the coins will have low leverage, maybe unreasonably low, maybe so low that no one, it's just spot at that point.
Yeah, I agree. There's the question of how much leverage you can give, especially as like everyone's funds are at risk, right? Like there's probably like a an advantage in having things isolated for the sake of being quicker to list there, right? Else we jeopardize like everyone's funds. And so you're using like the ultima, like going backwards from there is like, hey, why do we even need 32, right? Because it's like, it's basically adding a whole bunch of complexity on the liquidity migration. Do you think we could run the order book independent and the liquidity mining independent from the margining system? So if we do like, I don't know, we have like, maybe we have the legacy margining system, and then as things get better, maybe we add more different, right? We add different margining systems on top of the same order book. For the perpetuals, so we don't lose the liquidity there. because I could see how like some certain types of like safety guarantees make more sense for certain type of traders, right? Like the bespoke portfolio margining, which is heavily gearing towards delta neutral positions. Maybe it helps to separate these things out.
Oh, like separate margining systems. I see what you're saying. Yeah. Yeah, I thought about this actually. But I don't think we have to. But if we, so the way we would do it, and this would not require a migration, right? We could just say these Mango accounts, you know, you can create a Mango account for each type of margining system. And these Mango accounts require this kind of health calculation. And these other Mango accounts require the old type of health calculation. So that you know, we could do multiple types of margining systems together. But I don't think it's necessary with the portfolio margining that I just outlined.
Yeah, it's not necessary for now. Just want to know what your take is on like that being like is this something that is possible further down the line, or do you think there's like a big blocker there?
No, there's no big blocker really. There's, yeah, you can have multiple types of different types of margining systems on top. Yeah, the migration to 32. That's the question I want to ask you guys. Like, the migration is tough. It splits capital in multiple places. And you know, I was actually thinking we would migrate by now to another version, but so if we migrate, like it should probably be for a good cause. If we migrate to 32, and if we do a forced migration, like whereas everyone just gets their things converted, that's not so bad, but that's like, that feels like a rights violation or something. Yeah, we could do that if there's enough support for it. Otherwise, we would have to support two Mango groups like side by side, and yeah, but yeah, I don't think, if we do a forced conversion to 32, I think that's fine actually, as long as it's it won't be, and it's not, it won't be any different. Like it'll just be Mango, but with slightly larger accounts. Oh yeah, there's a difficulty. There's even forced, I think we haven't thought through all the details of how it would work in practice, because everyone's accounts have to be upgraded. They have to be like a new size. Yeah. So interesting. People think 32 is more important than being able to trade on any DEX. All right.
Maybe it's even more right, like provocative thesis is 32 perps more important than being able to trade any spot market.
32 perps.
Because that's what DYDX says, right? They don't have any spot trading, just USDC margining.
True.
Maybe that's a natural, but maybe that's actually like a reasonable limitation to be able to execute a product on that side that is like very, right, that it's easy to scale. Maybe not every type of collateral is really important. Maybe people would be happy if they have like USD and SOL and a BTC, and that's it.
Yeah, I don't think even, I mean, just look at those are the 32 tokens. The advantage is it's collateral. So that's that many tokens you can use as collateral. But even if you look at DYDX, the volume drops off a lot after the top 16, probably. There's an argument that, okay, people don't trade the other pairs, but they want the option to trade them when it's, you know, yeah, they don't actually use all those pairs that much, but they want the option. That sort of makes sense. Oh yeah, maybe we'll also implement a way to delist tokens, which we know how to implement. We just have to like, there's no way to delist in a reasonable amount of time, because it'll at least take a month to delist anything. Yeah, that's my thing with too many pairs. Like, I think right now listing 32 perps is just a no-go. It's just way too expensive to do that right now. I think we could do it eventually, but first we gotta like have a solid 4 or 5 like well-capitalized market makers to go to 32 perps. How do you force close people's perps? Is this a question about delisting a token? Well, when I said delisting, we know how to delist a token, and the design was basically like you prevent people from opening, increasing their position in that token, either borrowing or yeah, increase their borrows or deposits on that token. So you disallow that. And then you give a grace period where you tell people like, hey, like withdraw your tokens, close your positions, whatever, in the token that's being delisted. And then after the grace period, liquidators will just be able to like force sell those. They'll be able to take those tokens, but they can't take it into their MNGO account. They have to take it out of the platform. And so that person, if they had like COPE on the platform, it would be converted to dollars USDC at some percentage less than the fair value, the Oracle price at the time that it was converted. So yeah, it's not a non-violent procedure. It's a pretty violent procedure, but yeah, it's possible.
The big crypto yard sale.
Is there any forced call to settle all perps? There is not, but we could, this is what I meant by a forced migration to MNGO v4, is that we could add an instruction that allows you to, well, okay, migration is easy because you just have to transfer the positions over to a new group. But forced settle, forced settle is equivalent to basically liquidating everyone, right? And maybe liquidating everyone at an extremely low. Yeah, we could do it. I think it's just, why do you say that? Is there any perp market that should be like removed?
I don't know why I'm typing, but yeah, I'm just wondering in the future, you know, I think it would make it so that you'd be more likely to add a perp market that's really hot now, but
Yeah.
you know, if you worry in that a year it's not hot anymore and there's no volume, it would be nice to know, okay, it's not the end of the world. We can, you know, given a month's notice, tell everyone all the perpetuals are going to be closed in a month, either close it now,
Yeah.
or just be settled at the Oracle.
Yeah, the only reason was it's like a social thing, not a technical thing. It's totally possible to do it technically, because yeah, you just kind of delegate these tasks to liquidators, and You don't even have to get, it doesn't even have to be much of a fee, right? Or the DAO can put up the transaction costs for doing all this can just be fronted by the DAO. So very easy to do. It's more, it feels violent, you know? But it's a good point. We'd add more stuff. We would have added Luna and Matic if we knew that, okay, if it goes down, we'll just like get rid of it. Yeah.
There's, I think Microwave Cola also brought up adding more assets just to collateral. I think that's maybe something you're not aware of, but there's a bunch of like stable coins that are would be very interesting to add, I think.
Yeah.
Usually they allow you to mint some kind of US dollar equivalent token value against LP positions somewhere in Solana. So you could, I don't know, maybe in a Radium pool or a Saber pool, and then mint a stable coin against that. And then you might want to use that as collateral to margin trade again, right? So I think there's a lot of capital that we could unlock by adding a bunch of stable coins.
This is true. Again, it's the same idea as what I just described with the arbitrary, what I'm calling arbitrary margin trade.
Yeah.
You don't need, I mean, we could just create, if there's no Serum DEX. Right now, I think, right now the program requires a Serum DEX market. But we could just create one, a dummy one, doesn't have to have any liquidity on it. Just, you know, create it, put it in there. But there probably should be some way to trade it, right? Like, and as long as it's traded somewhere, if it's on Mercurial or Saber or, yeah, it's fine.
Kind of like Barry named, right? I think the Serum market isn't too liquid either. And the best way to offload it is to unstake or swap it on Saber.
Zoheb asks, on setting a negative P&L, can we please have a system that deducts the equivalent value in deposited collateral rather than borrowing USDC? It's not really possible because the system requires USDC as a kind of stable value one. Using any other thing to, like deducting any other thing from your balances would probably also require a fee because, yeah. Natively, everything's denominated in USD, right? And then if we give the other person some other collateral, then they have to convert it into USD. Then that's going to cost something. So best way to just, I mean, if the borrows are bad, if you don't like the USDC borrows, then you should just convert your collateral into USDC anyway. Just some program to convert it automatically. I think. Yeah, so I didn't get a clear answer of what's the priority here. We talked about portfolio margin, margin trade, like arbitrary margin trade, and 32 tokens. And everyone seemed to suggest that 32 tokens was important. And we can just do a forced migration on 32 tokens. Yeah. I worry that's not quite good. I think 32 tokens should come along with margin trade actually, because if you look at like the top volume on Radium pools, you'll see a lot of them are actually tokens that are in the MNGO group. Like for example, the most heavily traded in Radium is 140 million 7-day volume. It's Sol USDC. We already have that, and we have the Serum DEX version of that. But then the second most traded is MSOL USDT, which we can't add because we're limited to only USDC pairs. But if we had margin trade, you can just trade that pair. You can just go and trade that because both tokens, MSOL and USDT, are in the MNGO group. Similarly, if you just go down this list, it's like, at least on Radium, the top 15 would become available to us to trade. It's only when you start getting into like Atlas and stuff that now you would want to actually have more tokens that you can add.
Yeah, and also I think even the wormhole wrapped stuff would become available as long as you don't end the trade in it, right? As long as you convert back from wormhole to solid wrapped at the end of your trade.
That's right.
Yeah.
Yep.
So,
Which will add another layer of like, yeah, transaction fees, but okay. Yeah, there's not that much to say this week, so I'm gonna call it. So my main learning from this is that people don't really want portfolio margin. It's not that important. And I think I'd agree, probably. Yeah. Cool. Well, I'm gonna head out.